Right. I'm guessing we are live right now. Can you see my screen, Troy?
Yeah, I can see your screen, mate. All good.
Okay, very nice. If you just be an absolute legend and mute yourself, and then I'll do vice versa while you're talking, unless we're having a conversation, just to keep it nice and clean. And we'll get started. So, here we go, from the beginning. If this will open. Welcome, guys, to Altcoin Mastery and also the Bull Bear Market Mastery 6-week webinar course. So just deal with me for a second because I'm about to go on a little bit of a montage. You should have a nice little laugh along the way. All right, so welcome to the course. Welcome to the hardest game on the planet. You're up against the fund that has more money than you, the physics nerd that's smarter than you, the insider that has more info than you, the grinder that's willing to work harder than you, and they're all working to take your money from you. So why the hell would you want to go through all the pain of becoming a professional trader? I can promise you this journey you're about to undertake will be one of the hardest things you're ever to do in your entire life. If you really want to make it big, moon Lambos and all, it's going to require a lot of sacrifice. It's very isolating. You'll lose a lot of friends. You'll lose a lot of hair. Your health will suffer. You won't sleep. You'll wonder how you could possibly be so freaking stupid and get stitched up by the market exactly the same way, time after time after time after time, without learning. You probably break a mouse or two, maybe even a few keyboards, but eventually things start to click. You become a little bit more structured in trading. You learn risk management and start to remove emotion from the game. You focus down on a few key setups. You start tracking your trades and isolate the demons that are draining your account. If you're smart enough, you block the holes in the bucket. You start to master your setups and your own style of trading. You know your strike rate like the back of your hand on your key setups and have a risk to reward strategy to match. Then, and only then, you finally become profitable. And only then, after that, you get the Lambos. Right? So that's pretty much the trader's journey. And that, my friends, is the price of glory. If you're willing to go through the pain and the sacrifice to become a professional trader, I can tell you that there's nothing greater in the world than having an unlimited source of financial freedom. And I can tell you for sure that it's definitely worth going through the pain and the sacrifice to get there. So for me and Troy, what's our job? Our job is to fast track you guys through that journey so you don't have to break that many keyboards, right? So what we're going to take you through is basically all the knowledge and the best things that I've learned in my trading journey, which has been going on since I went to university about 11, 12 years ago now. I'm getting old, Jesus. And everything that Troy's learned since he started trading and become a very good trader full-time since mid-2017. And I've done so many courses, and that's the main reason why I started Altcoin Mastery to begin with, because I'd done so many courses and I saw the quality of the information that they were teaching people, and there was just so many gaps in it. I wanted to create a course that was really holistic and took people through that trader's journey and could help get people through and at least give them a little bit better of a leg up than just teaching them technical analysis. And through the 6 weeks, we're going to take you guys through some really important information. And this is what we're aiming to give you: a solid understanding of the basics, to cover some intermediate and then into advanced topics as well. We're going to identify your best method of trading, what suits you, the time frames that suit you, and the style of your personality as well. And we're going to teach you mine and Troy's highest quality setups. We're going to give you guys the systems to then create your own. Right? So your two hosts for the 6 weeks, obviously myself, Dax. I have a bachelor's degree in finance and economics from university. I started implementing the same principles that I learned basically in university, emotional market psychology and market cycles. And I got into cryptocurrency realistically start of 2017, started trading full-time in crypto mid-2017. And the reason why I started this program was that I had so many of my friends coming over to my house all the time at the end of 2017. And I was trying to help as many people as possible not get wrecked. But to my peril, I saw a lot of people continuously get wrecked, especially in that 2018 period at the start. So we started Altcoin Mastery to try and get information out there and try and help the community a little bit. And yeah, it's been great. A couple of years running the program, and obviously the last couple of months this year as well, teaming up with Troy, the Crypto for Blokes Discord community, and the Bull Bear community as well, doing a tour of Australia, doing the Bali getaway as well. It's been an unbelievable experience and getting to see you guys grow as traders. We wanted to offer a course that was online that anyone had access to. So we created the Altcoin Mastery 6 weeks market mastery course. So it's a little bit of background on me. Obviously, I'm not a financial advisor. I've worked in finance for various companies before, but this is not financial advice and purely for educational purposes. Right, so I want to introduce the next host for the series, which is Troy, Trader Troy. So Troy, if you want to introduce yourself quickly to the group.
Hey guys, most of you already know me. Got into crypto mid-17. Had no idea what I was doing when I first got in. Had no resources available really to learn other than Google. And I wasn't willing to pay for education because I was quite naive back then, and not too well off either. Went down the rabbit hole of learning technical analysis, and have since turned that into a full-time career since September. I was able to sell the top and take a large sum out to be able to survive off for a while while continuing to learn the rest of the market. And then getting heavily into the leverage trading, which is what we'll touch on later on the end of the 6 weeks course. I think that's where all the money is made these days. And altcoins that a lot of people have seem to be seduced by due to that one pump back in 17. But hopefully we can get you guys turning some Satoshis just by trading leverage and then taking it from there. I still day trade most days whenever I'm bored or just want something to do or just want to fill some time in. And that's because I don't feel like I'm working. So for me, I haven't really worked for 2.5 years. It's just been pretty much a dream come true to be able to have an uncapped income that pretty much comes down to how much you want to put in when it comes to time and effort, because what you put in is what you get back out, is how I see this market. If you're going to be lazy, you're not going to get very far, right? As Kyle introduced, the 6-week webinar course was, you are versing the best of the best in this market. There are bots, there's AI, there's huge fund managers, and they're all out to take your money. If you're going to be lazy, you're going to slip and you're going to lose that money, or not know how to protect it once you have made some of it. Other than that, I'm also not a financial advisor. This is purely for educational purposes only. Well,
all right. So how this works, obviously, you guys all know, but just to cover off for anyone who's not 100% sure, 2 sessions per week, Tuesday night, which we're on right now, and Thursday night, 7:30 p.m. Australian Eastern Standard Time. Each session will be recorded, and you'll be able to tune in on the website and watch those later through the portal. Okay, so what we're going to cover week by week, I'm not going to go through this step by step, but we've got some amazing content to take you guys through. Obviously, we're going to go through the key and what I believe to be the most important indicators and how to read them and how to use them. And then after that, we're going to start moving more into more strategy-based things. And then also the things that I really believe are the most important, which is more important than technical analysis, because you can learn technical analysis in a couple of weeks, but you can be a great technical trader, but you're actually not a profitable trader, or you're not good. You might be able to draw the lines on the chart really well. It doesn't actually make you a good and profitable trader, because there's so many more elements. Risk management is absolutely huge. Knowing your statistics, really knowing your setups inside and out, and focusing on your setups, having a day plan every day that you go over. And those are the things that are going to make you a profitable trader and get you away from trading based on emotion, which 90% of traders, even probably more, 95% of traders do, which is why most people lose money in this market, because they're simply just not prepared to do the work. They're not disciplined enough to do the things that are a little bit annoying, a little bit of a drain. They're not as cool as just drawing a few things on a chart and clicking the buy or sell button, having a little bit of a gamble and, the excitement of seeing a green candle pump or a red candle go down against you, and, you have that big emotional pull. It's quite addictive, right? But what you will find actually is the more structured you get in your trading, and when you have a good risk management strategy in place, you'll be less emotionally pulled by the market. And a really good trader that I know once told me that it was only once he became profitable was at exactly the same time that trading became boring to him. So when you stop seeing it as a game and you're not gambling anymore, you lose that little bit of that excitement, but your edge becomes so strong that it's more predictable, and then it's just going through the motions. And that's where we want to get you guys as traders, because that's where the money is made, because you're not responding. You're responding to the market, you're responding to what's going on, and you're not reacting to it based purely on emotion, right? All right. So we've got a few things to take you through tonight, and then we're going to give you a little bit of homework, and you guys can post those up in the Discord. So obviously it's week 1, session 1. We do have a lot of really fresh people in the course, so we have to start off with the very basics. We're going to go over candlesticks, identifying the trend. We're going to go through trend lines, obviously, identifying support and resistance. We're going to go through support and resistance failures as well. We're going to go through, basic patterns and formations, double bottoms, double tops, and stuff like that, right? And then also we're going to go through a few more advanced things as well on each of these subjects. So there's going to be the typical trend. There's going to be bits and pieces for everybody, every level. So there might be a few people, candlesticks, whatever. But we're going to teach you guys some things about candlesticks that even, the advanced people probably aren't really that drilled down on. Troy does a lot of just pure candlestick trading, right? So he's going to be a great, resource to go over that with us today. So yeah, let's keep moving and move forward, so we don't want to drain on for too long. But the basics of reading and understanding candlesticks, right? What we're looking at here, obviously we have our green candles, which obviously candles which are going up in price. So we have our opening period, which is down the bottom. We have the closing of the period, which is at the top. So the shadows or the wicks or the extremes, depending on which market you're in or what country you're talking to people from, obviously these little lines out the top and out the bottom, right? So the bottom of this is obviously the very low extreme, or the bottom of the wick, right? And that tells us the most extreme that the price made through that period. So this might be a daily candle, right? So this is the very bottom that this is the opening where the candle opened. This is the extreme that went to. This is the extreme top that it went to in that daily period, and this is where it closed. The red candles are obviously exactly the same, right? Obviously, we start at the top with our red candles, though, not at the bottom with our green candles, because these candles are going down. If it was going up for a period of time, when it was up pushing to this high extreme here, this actually would have been a green candle with a wick out the bottom, right? And so when it flicks over and we have an open candle below the opening price, that flips into a red candle, and then we have the wick down to the bottom extreme, and then that shows us how far down the candle went and where we closed it off. So when we're drawing trend lines and stuff like that, it's important to understand this, especially sometimes on BitMEX. Especially recently, I've been preferring to draw my trend lines and resistance support levels from the candle closes, just because there's so many outliers on BitMEX, and there's a lot of jumping around and stop hunts and things like that. So it keeps it a little bit cleaner. Typically in most markets though, so like Forex, commodities trading, typically the best way to look at the market is focusing on the extremes, so you take the wicks, right? So I'm going to go through a little bit of really basic candlestick analysis here, right? And I think the first one to really get your head around is understanding bullish engulfing patterns and bearish engulfing patterns. So engulfing pattern, or also known as an outside bar, if the wick or the candle body goes lower than the bottom of the candle body. So this one here isn't really an outside bar because we have the double bottom down here, If this one here is actually an outside bar, right? So outside bars in golfing patterns, they're sort of reversals. This is a bearish outside bar. So a bearish outside bar would be telling us that the market's going to head down. We don't get as many outside bars in crypto because the market open and closing between hours is pretty efficient, to be honest. Like our markets in cryptocurrency are super efficient. In other markets like foreign exchange and commodities trading, they're not as efficient from the opening and closing, and sometimes the price can jump around a little bit more, which gives you, things like the bullish abandoned babies, bearish abandoned babies, the evening stars that look like this, morning stars that look like this. Whereas in crypto, typically we end up getting more tweezer bottoms and things like that, and you're going to get more basic candlestick patterns like bullish and bearish engulfings. So it's basically called an engulfing pattern because the candle on the right, which obviously is after it's post the candle on the left, because we moved from the left to the right. Right, so this candle here is larger than the candle on the left, so it's engulfing the left candle, right? We have a little wicks to the bottom. So this is actually also called a tweezer bottom because we have two wicks down the bottom at the exactly same level, right? And then we end up in bullish engulfing, which is actually typically going to give us a change in the trend. Some other things to look for as well when you have a downwards period in the market. So we have a downtrend, right? We might have a bullish engulfing pattern or something like that. In the middle of those, we might have a doji, right? Which is basically one of these candles, like this hammer here, for example, right? And that's going to give us our pins and hammers. So we call these bullish hammers or pin bars, right? And basically they're very good signs, especially when you get on high time frames of 4 hour and the daily, especially after a downtrend, you get those at the bottom. That's one of my favorite setups to take, a bullish pin bar, especially at the bottom of a downtrend. And, for example, this one here, we're a bullish pin bar here and then another bullish pin bar here, which both are perfect entries at the bottom of these rallies. I'll show you something that's very interesting in a way to draw horizontal levels. That also will help to give us confluence to take trades like this. But yeah, bullish pin bars are one of the best setups and easiest to learn. And they're very profitable once you can pick them out in the market. And I think they're a great strategy to understand and very simple, and you can start profiting from them pretty much straight away. So we're going to go through that a little bit later. But first, I'm going to hand over to Troy, and he's going to take us through the Candlestick cheat sheet. And we're going to go over a couple of different patterns that he likes to trade, the broadening descending wedge, broadening ascending wedge, and a few things like that. So I'll pass it across to you, Troy.
G'day guys. We're going to leave your screen on, Carl. It's the easiest way to do this. Just put this cheat sheet, which we're going to take over. Hello. Quick one, guys, can you hear me? Where's my mic playing now? Okay, sweet. Carl's just gone AFK. All good. Candlestick patterns. I might just take over the screen if I can. Do it on my own. Oh, he's still sharing. Okay, cool. You need to unmute. Give me 1 second, guys. Sorry.
Okay, I'm unmuted now. Sweet. Yeah.
All good.
Not sure what happened there, but I'll flick it across to you now if you want.
Cool.
Right, you've got the screen.
All right. Are you my screen on there? All good?
Yeah, your screen's up. Nice.
Cool. I'll just bring up the chat. Cool. All right. Look across, get a fresh chart. Got the default chart here. And we'll just focus on these candles we just covered, the pin bars and the hammers, and then we'll also move into like the candle stick patterns and how they play out. Carl, as you mentioned before, the hammers and the pins. You can see here, this particular candle, this nice reversal. It's a nice pin here. It's closed red, which is a bit of a bearish indication, but it is also still a doji, so it's indecision. After a bearish engulfing candle like this, the following candle, we're going to want to see it climb at least 50% of the previous candle here to see that it's going to be a bullish continuation pattern after printing a candle like this. So if we were to use, say, the fib tool, the quickest way to do this drag it from the bottom to the top. It's a bit intense there, but we'll just zoom in and we'll be able to see, trying to cross to it, this particular candle. So this, my fibs are a bit intense. I'll clean them up a bit for you, but we're looking for the 50% fib, which will be from here to here, just now up here. Cool. So this will go. So this one here, so price has to get on the weekly to this point here. So I'll just mark that. I'll just show you a wee trick. So I can just mark this here now, and I can delete my fib, and it's giving me the 50% from that point. So we go back on the weekly now, and we can see the following week had to reach this particular price point and close above it to be a bullish continuation pattern, if that makes sense to you, because that's 50% of this candle here. Does that make sense? After printing a potential bullish reversal candle, once we got to the upside, if we closed above this at the end of that week, being a weekly candle up here, this is a bullish continuation, and we can see price held, but didn't continue on. So we were actually in a bearish retest here. But that gave you a nice sign that we're probably going to head to the bearish retest, which is also the favorite pattern that I trade. If anyone's ever watching me trade, I cover the broadening ascending wedges, or the ascending broadening wedges, so descending and ascending. This is one of them right here. I'll show you real quick. It usually works in 3 waves up, like this. You can see get 3 impulse moves like this. Usually get a bit of a blow off top, usually comes out of the trend line and then comes back through, falls under the support here initially, and then comes back for that retest. So this is usually how I take this trade. I can go through on the 5-minute chart shortly of a few trades I took today that just actually played out multiple times. So I look for this particular setup here. Once you see price starting to reject at resistance, and I look to go short here. I find that's probably my favorite setup with Bitcoin, because it plays out on all time frames and it is very reliable. And there's actually an inverse version of this as well. I'll just quickly jump to the 5-minute chart and I'll show you what was playing out today, which is 2 of them. They're right here, right in front of you. I don't know if you guys can spot them straight away, but I'll just quickly draw them in. Got one basic one for here. It's really small, but it's still that exact same market structure, just on a smaller time frame, right? This is your first pump, second, your third. You come under and you get that retest. So a bit dirtier on these smaller time frames, but if you can understand that's the pattern of the market, the psychology behind the impulse moves, you can start to trade these. There's another one here on the downside. So still, again, a little bit dirty in regards to how it looks on the 5 minutes. But if you can pick these up, they make for great trading. And this is just candlestick patterns. So again, this is on the downside though. You got 1, 2, 3. You can see it's making lower lows each time. All right. But then on the last one here, it pumps straight back up and then breaks that trend. So what we do is look for a long here. Usually how I do it is just long on the, usually the second or third touch on the 5-minute chart. As long as it's holding above it, and I usually have my stop loss either directly back in the pattern, because that invalidates my pattern, only once it starts launching now, or my stop loss would be down here. But we'll cover how to set these up later on. But it's just one of the patterns of trade. You can then see, so that was one, that was a broadening ascending wedge here. This one's a broadening descending wedge. And if we go again, straight after that one is another one here, all right? So if you can learn to trade this pattern, you can spend the entire day trading like I did today and turn a little into quite a lot with just a basic, easy entry pattern. Every time it comes to that retest, you go long or short based on ascending or descending, if that makes sense. And then you can, based on how you want to take the trade, go from there. So this one here was found support. You can see here it found support and also started to make a bit of a falling wedge here. And price broke out, right? I mean, I've got, if I can move this real quick, I'm not sure if I can. It's not letting me. There's actually a fib right here as well. So when it started to find support on this fib, that was also a clear sign to maybe potentially be a bit greedier or taking profit earlier with this trade in particular. Because once it had reclaimed this fib through here, which is about the $80 to $100 mark. Price was hitting back up. We'll cover fibs at a later time though. But that's just a simple pattern that we'll cover in detail a bit later. I'll just a brief rundown of it. Just those 3 dips, usually breaks. This is where they grab the liquidity before they throw it in the other direction. This is your confirmation usually. There's 2 ways of seeing this usually. You can see how the pattern comes down through here. There's 2 different trend lines. That's something else you'll learn over time once you start to learn the candlestick trading. That sometimes this retest will appear to be on the inside and sometimes it'll be on the outside based on how you've drawn your trend line, right? And because the market is what we make it and we're all trading our own trend lines and the rest of it, both of these trend lines apply. Neither is incorrect, if that makes sense. So understanding this kind of in fluid with it like this is what will make you a great trader if you're going to stick to just price action candlestick trading like I do on the lower time frames. Being a little bit adaptable, removing your OCD will make you maybe a bit more of a profitable trader because this is ultimately just impulse moves by emotion on the lower time frames, right? And then you can distract them. So this is, you can see another one right here. It's a really, really small one, but it's another broadening descending. So it comes through here, launches, carries on up, right? They're everywhere. If you can learn a single pattern like I have and master it, that's when you'll usually take a turning point in your trading and start to become quite profitable because you'll know your setup, you'll know how often it plays out in your favor. And as long as you take the same approach every time, ultimately you should end up as a profitable trader. It's good to see Bitcoin push up at the moment. It's beautiful. All right. I'll see if I can find another typical pattern that plays out quite often. Real quick, just on the candlestick trading that I liked as well. It's failed here. This is what I was watching for the last week. It's usually when you get a bullish engulfing like this, followed by 3 candles down, and they don't go lower than the bottom of this bullish engulfing, all right? And then if we look at the volume as well, so we bring up our volume. Yeah. Cool. So you can see here volume was dying. See it's coming down as this came down. It's usually an indication that there's a bullish continuation playing because it's taken 3 candles to achieve the same distance as the 1 candle and volume is dropping down, which means sellers are getting exhausted down here. And usually we see a nice bullish engulfing come up out of here, which is just simple price action trading. But we've failed to do that this week, so I'm a little bit airy at the moment. We'll see how this goes. Ultimately, I would have preferred to have seen this up here, but as we go back, if we go back to this 4-hour chart, we can see last night when it went for its run, it got shut down pretty quickly. All right. So that's just you've got to adapt to that. It's another anomaly in the market, and you can't just say because this candle pattern looks like it should be doing this on the 3-day here, for instance. Just because it looks like it's all playing out perfectly doesn't mean it will. So you should always be fluid when it comes to candlestick trading or pattern trading like this, because they don't always play out. If that makes sense.
There's also a bullish pin bar on the 4-hour there as well.
That
was the one I longed.
Down here.
No,
this one here, yeah.
In the flag. It's at the bottom.
Oh, yeah. Nice.
We grind up after that. So the way you play these guys, you long on the close, then you just put your stop loss a little bit below the bottom of the wick. I'm going to teach you a way to use ATR to give you a bit more distance on your stop loss. But for the moment, we'll just say stop loss just a little bit below the wick. And generally what happens is if the market's going to reverse, we'll take out the bottom of that wick. If the market is bullish, it won't come down and take out the wick. And as you can see, this is playing out quite nicely.
It's beautiful. All right, do you want me to throw it back to you, Kyle?
Sure thing. We'll have a look at the slideshow and you can take us through the rest of them.
Yeah. Yes, okay. Do you want me to do it from my screen?
If you've got the slideshow up.
Actually, I've just got this.
If not, just flick it across to me.
All right, cool. I'll do that. Might be a bit easier. Cool. Should be good to go for you.
Yep. Sweet. All right. From current slide. All right, I'll let you take this one.
Reply to you. Cool. All right. So the hammer we just covered, which is the downside. You see the big wick come down, which then implies solar exhaustion. And then you usually see a bit of a reversal after that, which is what we've just seen, as Kyle pointed out on that 4-hour chart, during this price action after that big sell-off overnight, on the 4-hour close as a pin reversal and back up you go. The opposite is also true on the way down, which is when you have the inverted version of that, which is on the second picture of the second candle patterns on the top left there. Yeah. You can see that as the inverse version of it. And so what that means is bulls have tried to defend and been exhausted, but they've also still closed and not sold off. So therefore, the next candle is bulls' chance to swing it back to the upside, which is actually one of Kyle's favorite trading patterns, the Morningstar reversal, they call it, which is what we were just covering before about the 50%. Ideally, you want that third candle of the sell-off, the inverted hammer, and then the third candle to reach at least 50% of the bearish engulfing from the sell-off. And that will give you your inverted hammer reversal confirmation. That's one thing to have a hammer. The confirmation is once you've got to close above 50% coming out of that.
Yeah, and a little one on that. If you have a bullish engulfing pattern as well on the push candle after the inverted hammer, obviously that's a lot more bullish as well. And if it just closes just over 50%, and so then you can set your targets a bit higher.
Yeah. Next is your Dragonfly Doji. This is very similar to the hammer. However, it's a more indecision where it's closed. It pretty much means it started at 100, dropped down to say 50, and then closed back at 100. So it was heavily defended by the bulls, and the sellers were exhausted at that point. And then it usually results in a nice reversal as well. And that works for the opposite as well on the top side. If you see that on the top side, a nice big candle like that, it's usually that top is in, and that's pretty much what we saw on the, I think it was daily or the free daily of the 14K run and both the 2017 peak. We had nice big doji candles at the top. The next is your spinning top. This is just a doji candle that's bullish. If it's at the top of a run, it's usually a sign of weakness. But it could also be a sign of a continuation as well, based on what's played out within that candle. So if it's a 4-hour candle, there might be a very bullish 5-minute setup happening inside that. So if you dissect that, you'd then be able to see or assume what would come next. But if it was a bearish setup happening on that, then you'd be a little bit more neutral to that because it is a bullish close. So you still give it the bullish nature, but at the same time, you've got to be a little bit more careful with these candles because, if, like I said, on the 4-hour candle might close like that, but there could be a nice big bearish setup about to happen that you can't see without zooming in. So we'll teach you these patterns to find, to look within the bigger candles to see how the next candle may play out. All right. From there, the bullish kicker that doesn't apply really to crypto. Bullish engulfing, Carl's covered that already. Towards the bottom, which is the second row of the far left side. Towards the bottom is when the wicks are at the bottom and they are parallel to each other and they come down to usually the same price point, very, very, very close. And this is usually a bit of a reversal pattern, or it could be sitting up as a flag, depending on how it's playing out. But it's usually a solid sign of strength that it didn't drop past that point. And it's usually how a bottom is found. Once you create that, usually it creates a support level there as well, where those squeezes are and the candle neck bodies. Morningstar, covered that already. That's the 50%. Abandoned bullish baby doesn't really apply to crypto. The free soldiers is one of my favorites, which I covered just before on that 3-day chart. This happens in both directions. So you can see right beside the free soldiers is a free line strike, which is what I was referring to in my one. Was I was expecting the play out to be, but it did not happen, that's fine. But the free white soldiers is a continuation sign of strength. But it usually, if it was started by a bearish engulfing followed by free white soldiers, which means free green candles like that, that's usually a bearish continuation. But if it's just free solid greens in a row, it's usually a very solid sign of strength, and you shouldn't be in a hurry to sell unless you've got indicators or small time frame patterns playing out to the bearish side, if that makes sense to you. The bearish is pretty much the complete opposite of the bullish. You just apply the same logic to the reversal. So, for instance, the hanging man, you see the price dump and then recover at the top of a run, and that's usually the buyer exhaustion. And then you usually see a bit of a sell-off follow that. Not too common in crypto. I don't see too many hanging mans like that in crypto. The shooting star, very common. That's when you get your blow off top, which is what we were talking about before. And then the confirmation for the shooting star is when price closes on the next candle 50% lower than the candle body of the initial pump candle hit for the morning. The shooting star. Gravestone doji that works exactly the same as the Dragonfly doji, but to the upside. And that's the one I was referring to earlier about 2017. And in our current 14K run that we just had, they were both finished off with gravestone dojis on a higher time frame. And that's usually a sign of top is in. I remember having a conversation with Kyle about that at the time. And I'm like, that's exactly what it's called, a gravestone doji. This is the run over. From that point on, we were pretty bearish. And then same again with the bearish print top. So if it's at the bottom of your run or at top of your run, that's usually a sign of weakness. It could be a flag happening inside that. Could be a symmetrical triangle, which is a continuation pattern. You usually see those after a pump or after a dump, and then price determines where it's going after that. Anything else you'd add to these, Kyle?
Sorry, I was just on mute. What did you say, mate?
Anything else you'd add to the candlesticks?
Not really. I think you pretty much covered them pretty well. Obviously, the ones to watch out for that obviously pop up all the time are your hammers, like your hammer reversals or pin bar reversals, right at the bottom of a downtrend. And then obviously the shooting star blow-off tops, which are at the top of, obviously really strong rallies. Usually you get them after, sometimes you get like your sort of Elliott wave sequence where you get your 2 to 3 impulses up, then you have a really strong blow-off top, and then sometimes it goes and forms into a bull flag. After that, though, if you have a bull flag that then goes into another shooting star at the other side of the bull flag and forms SFP as well, that can be a very good short setup as well. And if you're in a long, it's very dangerous to be in. So you want to be able to identify those for sure, because if you see a shooting star reversal like this, flicking into an SFP as well, you're probably in a little bit of danger. And we're going to go through that pretty in depth as well. So I guess we can move on from here. So obviously, we sort of covered off star reversals, but we'll go a little bit deeper into them because I think it's very important to be able to trade them. For me, they're one of the most profitable setups that I trade. So shooting star reversal obviously indicate tops. Morning star reversals obviously indicate bottoms. And then we also have a few probability enhancers to be aware of, which are bullish and bearish divergence, which is something we're going to go through using the RSI. Engulfing candles as well, which we just covered. So if you have, a morning star reversal at the bottom like this, but you've got a little wick down the bottom and a doji candle in between these two, and then you have an engulfing pattern coming after that, obviously it's going to be a more powerful pattern, right? So it's going to increase the probability that you're going to have a stronger rally and a more profitable trade. And instead of taking profit at your first point of resistance, you might look for the second or third level of resistance as you take profits, right? Obviously, as well, swing failure patterns in combination with these, obviously a big probability enhancers. And also if we have buy-sell signals from our indicators as well. All right, so the next thing that we need to cover off, guys, is just identifying the trend. And this is probably, your really bare basics 101. So like I said, we're doing basics, then we go a little bit advanced on that topic, and then, we go back to a new topic, and we'll start off on the basics again there. So bear with us if you, are quite an advanced trader. There's going to be some gems like we just went through before. And if, we are going a little bit too quick for you as well, and you're like, oh my God, all this stuff is absolutely blowing my mind. As we go through over the 6 weeks, you actually could be able to come back and rewatch these webinars, and you'll be able to pick up the more advanced topics as we go through each one as well. So back to 101, identifying the trend, right? I think this is probably the most important thing, because if we don't understand how to identify the trend, you're going to be in a lot of trouble. And this is where I saw so many people just get absolutely destroyed in these markets in 2018, because everybody for 2-3 years, let's be honest, most people got into crypto at the end of 2017, and they were probably in it for about maybe 10 to 5 weeks, and then they experienced that massive blow off top, and then and then the trend reversed, right? And to be fair enough, we were in an uptrend for about 3 years, right? 4 maybe, even if you want to push it a little bit, but 3.5, I think. And then all of a sudden we were in a downtrend, right? And it caught a lot of people off guard because they weren't prepared. They didn't understand that buy the dip is something that actually only works when you're in an uptrend. And everybody kept on posting up, oh, I bought the dip, bought the dip, bought the dip, bought the dip. And now they I've run out of money, can't buy the next dip, blah, blah, blah. There's always those memes and stuff like that floating around. But the thing is, if you're buying the dip when the market is trending down, you're buying at the maximum point of financial exposure, right? And you want to be selling the tops when we're in a downtrend. So you really need to be able to identify higher highs and higher lows, and really be able to identify lower lows and lower highs. And when we're experiencing those lower lows and lower highs, like we have been in most of crypto for, especially 2018 for a year, and altcoins for about 2 years, we need to be able to identify those to make sure that we're trading and we're buying the dips in a bull market, and we're selling the tops in a bear market, right? It's pretty much the same strategy. You just got to inverse it, right? It's not that difficult. All right, and a few other things as well that we can use, which are little tricks I'm going to take you guys through as well, is just the momentum indicators and how we can actually use the weekly RSI to tell us if we're in a bull or bear market for Bitcoin. Right, so here's an example here. So we obviously make a higher high here, and then we make a higher low, right? Make another higher high, only just, it's not really that significant, but it's still there. And then we make another higher low just here, only very, not very significant, but it's still there. Then now we break up and we make another higher high, right? We can't come back and come near any of these lows down here. We make a higher low, we make another higher high here, we make a higher low, high, low, right? And which obviously in an uptrend. And then the trend flips actually when we break the trend line, right? Which actually a line through here. Right, we break through that, and it flips, and now we make a low, we make a lower high, and now we make a lower low, right? So that's the first indication that the trend is actually broken. And you can see as well, another thing that you can take notice of, when we're in a bullish market, the price action is really close together. It's not as volatile. As you can see all through here, price sort of pumps, goes sideways, a little bit of volatility through here when we're in the bit of a flag pattern, right? And then it sort of breaks out again, and we're very tight through here, pumps, a little bit more volatility as we're going sideways, right? And then it gets really tight again, tight still all through here. And then as soon as it flicks across from being bullish to being bearish, you see these huge swings in volatility kick in, right? And if you're a very bullish trader, you're good at trading in a bull market, right? And you're good at trading all this stuff, this is when you just stop trading, right? You want to be able to identify where you are at in the market and identify what you're good at trading. If you're not good at trading these highly volatile, massive swings, some of these swings are $1,000 in a couple of minutes, right? We had a 15% 15-minute candle at the top of this peak here, right? You can also see we had a 1 hour shooting star reversal. The wick doesn't go at the top, but you can sort of see, if you've got really amazing eyes, there's a wick pointing to the bottom there. So it's a little bit of a hanging man on that one, and then we dump down afterwards. So yeah. Just something to be aware of. When the market is bearish, it's highly volatile and it jumps around all over the place. When the market is bullish, it creates these really nice patterns. You can trade very smoothly, right? This is a nice bull flag, breaks out. This is another nice bull flag, breaks out. And there's really nice low time frame patterns as well, which you can trade quite effectively just using the basic strategy, which we're actually going to teach you in session 2 of week 1, which is on Thursday night. We're going to take you through basic strategy and show you guys when the market is bullish, which typically Bitcoin spends majority of its time as a bullish market. It's just unfortunate the last year or two, right? The last 2 years, the market has actually been a lot more bearish than it has been bullish. But we're just in that stage of the 4-year cycle for Bitcoin, right? And we're getting to the point where soon, if we do continue the uptrend and start to push new all-time highs, we could very easily see 3 years of bullish activity, right? With consolidation periods in between, which go from anywhere from 1 to 3 months, right? That's typically how Bitcoin moves. Doesn't mean that it's going to move in the future, because past is always a prediction of the future. But that's what we're going to be looking for anyway to unfold. All right, so assessing the trend, what we can use as well is the pivots high-low strategy. It's a great little tool for helping us assess the trend. So you can just go into indicators, right, which if you don't know how to use TradingView very well, you can get in here, and you go indicators, and it's just this one here. So just go pivots high-low, right, and then that puts us onto the chart. We'll go down to the daily, and you can see how it's popped up with the high and low points in the market, right? So when obviously these are trending down, we're in a downtrend, right? When these are trending up, the tops are trending up and the bottoms are also trending up. That means we're obviously in an uptrend, right? So it's a good, real easy way to just pick the tops and bottoms, right? If you're having trouble, obviously it picks out the wicks and not the candle bodies for this one, because it just goes to the extremes. All right. Let's get back to it. So weekly momentum. This is a good handy little trick that you can use using the RSI, right? So obviously the stochastics RSI is a good tool for this as well. When you have a weekly or daily upswing, generally the market's going to be quite bullish. And when you have a weekly or daily downswing, the market is going to be acting more bearishly, or in a consolidation period if the market's bullish, right? We're going to go a bit further into those in later topics though, but I will show you something that's pretty cool just on here. So if we go VLX, all right, this is the one that we want. All right, we're just going to get our pivots off. All right, we've got MACD up at the moment. Give me 1 second. Just get rid of this. We get our, oh no, actually we don't need stochastics just yet. All right, so when we go to the weekly, there's a really clear line that goes through the middle of our charts on the RSI. So we can just grab a horizontal line, which is going to be under the trend line up here. Or you can just chuck that anywhere on your chart. Right click on that and you can go settings. So TradingView is fully customizable, and you can get in and you can basically create anything that you want on here. So come in here, and we go sideways through this period here, right? And what we're going to look for is the coordinates, and we're going to just change this to 53 is the level, right? All right, so then we're looking through here, and you can see that every time we come down to this area here, it bounces off it. And this was pretty much the entire bull market for the entire 2018. And then obviously when we flipped into a bear market, it was coming back up and getting rejected by this level. Now, one thing to take notice of as well is we were looking for this to get a bounce off here. It's actually we've come through and we're underneath the 53 period, right? So what we could look for is this is actually to be a short setup, because this should have held as support, right? It's a very strong level of support and resistance, right? So when this comes back underneath, test this level, it could become an area of clear resistance, right? So just see something to be aware of, as typically throughout most of the history of Bitcoin, this area around the 50 level on the weekly chart has dictated if we're in a bullish or bearish market, right? So if we can get back above that, could be good signs. All right, let's keep it moving. RSI for momentum swings. And then just remember, the trend is your friend. One of the biggest things that kills in traders is that they're bullish in bearish conditions, which obviously we discussed before, right? So altcoins are the majority of the time in a bearish market, but everybody's always trying to buy the dip and wondering why it's not working well for their P&L, right? So one thing that we always teach our students is to get onto BitMEX and take a look at the, how often we actually get bearish retests key horizontal levels on altcoins. They just consistently, you can just easily sell a bearish retest consistently and be quite profitable for a much longer period of time for an altcoin than what it's going to be in an uptrend for, right? So it's a lot easier to profit off altcoins on the way down because they move a lot slower as well. They're not as aggressive, not as volatile, and they typically in a decline for maybe 1 to 2 years, and then they have a pump cycle that goes for about maybe 2 to 3, possibly sometimes they're lucky enough to get 4 weeks. So remember to play the trend and not trying to be longing every single opportunity that pops up, because what happens is altcoins go into a bit of a consolidation bear flag period. They come up for a bearish retest. All the new inexperienced traders start to long the shit out of it, and then it dumps off again quite aggressively and everyone gets caught holding bags. And there's plenty of people on this call, I'm sure, that have been holding bags for a long time because of doing that, right? So we want to avoid doing that in the next cycle, right? So trend lines, the next thing we want to look for. So obviously we've been covering off our trends, right? So we're looking at these high highs and high lows, right? So what we want to do now is we want to be able to connect these peaks. So we're looking for our key swing points in the market, right? And this is the other reason why you want to be able to identify those key swing points in the market, right? Later on, they'll become really important for horizontal support and resistance levels when we're looking for things like swing failure patterns and just support and resistance flip trading, right? Which we're going to touch on just shortly, but we won't go too deep into it because we only have so much time every webinar. But we want to also obviously cover off trend lines, right? So just basics for trend lines. Troy was talking about them before, but all you want to be doing is just connecting 2 points in the chart, right? So for example, right, we can create a trend line from this point here to this point here, right? So we've got 1, 2, 3, 4 touches here, and you can see it comes back and acts as support at this level here, and then bounces off that again, right? Same on the bottom side of the market, right? We can see that there's a really nice strong trend through here. Every time it comes back to this area, it rides a trend or bounces off it, right? So 1, 2, this is obviously a lot of touches through here. We'll just count it as 1 though. So 1, 2, 3, 4, and 5 touches on this trend line. It's pretty strong, right? All right, so on lower time frames as well, these trends might get interacted with again. Obviously, you're going to have trend lines all over the place, so we want to be able to identify our key trend lines and see if those key trend lines actually create shapes which we can use to form patterns. So, for example, something like a descending trend line, like this one through here, right, was obviously very prevalent. And then obviously we have the bottom that went to the bottom of the 2018 market. And then we have a descending trend line, which typically breaks to the downside, which obviously is what happened here, right? We also had another one of these here. Right, and so that's what we're typically using our trend lines for, to help us pick out possible patterns and shape setups in the market, and just to see areas where we might bounce from. Of either support or resistance. And typically, one of the best ways to use trends is also in combination with something like Elliott waves, but also just to see when we break a trend, especially on low time frames as well, like Troy was showing before, you break a trend line and you retest it. And so this is a really good example through here, right? So we have 1 touch, 2 touches, 3 touches, break that trend line, we get 1 retest here with a nice sell-off, we get 1 retest here, we get another nice sell-off, which is quite aggressive actually. So yeah, just simple use of trend line here could have got you 2 nice trades, right? This one would have been a nice 11.5%, and this one, you probably would take a profit down here, if not down here, 23%, right? If you're an absolute genius and you held all the way down there, 33%, so not bad. Right, obviously these pop up on low time frames. I was chatting with one of my students earlier today, and we're going over these actually. So they do play out on all time frames. I'll see if we can find a couple popping up on lower time frames, looking at my main chart. Right, obviously the ones that Troy was showing just before. Right, when we have a descending trend line, so for example, this one through here, right? This trend line gets broken. This trend line gets broken, and then we flip to the other side of it, and then we start to take off quite aggressively. So yeah, something to look out for in those sort of situations is definitely pretty handy, and you can make a lot of money just trading on simple trend lines. Do you want to add anything to that, Troy?
Yeah, if you want, I'll take over for trend lines for a little bit.
Sure, I'll pass it across to you. Stop sharing.
Sweet. All right, guys. I'll just cover trend lines real quickly, just how I use them. They're very subjective, but they're probably one of my favorite little things for trading, and that's why you guys are here, because you actually want to learn how to trade, right? We'll just zoom in onto a random time frame. I'll just literally go ahead and just draw trend lines how I would, and I'll just explain that as I do it, right? So I'm looking for trend, whether that's candle wick tops, bottoms, or whether it's the candle bodies themselves. All I'm looking for is trend. Just going to pick 2 random points, just like Carl said, 2 points. What you can actually do is just do that, and then you can actually use this tool here, and you can make it extend to the right, and that'll then draw your trend line perfectly from that point on after you've found 2 points. So we can see that they haven't done anything for us yet, but when we do get to that, they will act as resistance, right? And usually the first time we hit resistance like this, it doesn't break through. It's usually the second time. I'll just draw another random 2, and we'll just go from there. So just this one. You just see from this point here. So we can see it was rejected heavily once. We came back to it, got above, fell back under, got above, and started closing above. But this is what we call like a fail swing high pattern, or this is a bit of a bearish looking setup. So even though we're over this trend line and the breakout looking fantastic originally, once this candle was here put in, I'd switch to a bearish point until proven otherwise, right? And I'd be looking to probably short this after this close had happened, and would have had a stop loss either above here, or above here in this range, based on the leverage I was using. Because obviously, if your stop loss is up here somewhere and you're a high leverage, you're going to lose a lot of your account because of that. It depends on the leverage you use for the trade. But we'll go back to trend lines again. I try to look for closes above or below it, depending on where it is. So we'll just go down to here. So we can see here, trend, bit of a bullish engulfing handle at the same time, not really. We've got those 3 candles to the downside afterwards, and then we've got the bullish run afterwards. Once price it on a candle like this, followed by a candle like that, I would have gone long in a position like this, because we've got a close outside of and bullish of that trend break. That makes sense? So the trend's coming down. It's just a trend line. This is not the only reason we go into a trade. We look for other stuff as well. But our price action and trend lines, we've got a bullish open and close outside of this trend line. So for me, that'd be an indication that we're going to head up, or at least sideways and up from that point on. So I would have longed on the open of this and had my stop loss probably down here somewhere, back into this trend line, and then allow that to play out. Does that? I'm hoping that makes sense to you. So the Q&A question here. I noticed the bearish look seemed to be good, just the volatility. It depends on where you are in the market cycle, Anarchist, with that question. If you're at the top of a market, obviously going to be a blow off top to the upside, but the wick will be huge, because once the price starts to reject, everyone wants to get out of the top, and then vice versa at the bottom, right? If price starts to reverse at the bottom, everyone wants to get back in. So that's why you see these massive wicks at either the top or the bottom of the market. Just another version of trend lines is just support and resistance. We'll cover that shortly, I believe. But it's just this trend line here. I've just gone from just a certain point. You can see there's touches along here, right? You can see it had no on this time frame on the 4 hour. There was nothing here. Went straight through clean and down straight through clean. If we look on the small time frames, they're probably modeled around here for a bit on 5 minutes or something. But you can see here, this is a nice evening star reversal. So you've got your bullish engulfing, your little top here, and then you come flying back down 50% plus greater. And that's telling you that it's looking pretty shit. And then you should be looking to short the retest if there is one, which was this candle here, which we were talking about earlier as well, which is that after that other trend line that we drew, right? So once that was put in, looking for a short, it's just basic trend. But you want to look for closes above and below it, or rejection heavily at it like this. I might just go to a smaller time frame. I'll just quickly draw some more trend lines, how I adapt current price. So we can see here, straight across, right, basic support and resistance flip. We can see it rejected the first time off it. I actually had a short setup here on one of my accounts that took profit while I was talking before. It's quite nice. But you can just see, you never break out usually the first time you come up to it. See this? First time you come up to it, rejected, come back down, rejected, come back down. It's just another little bit of confluence if you're scalping. Little tip that I use, or trick that I use, is usually reject the first time. And if you can learn how to trade these, I think it'll be quite profitable because the dumps are usually quite volatile. And that dump alone, I think it was like 0.16, which is what that's 16%. If you're on cross leverage, which is something that me and Carl trade a bit, and we'll probably teach you guys to use as well, because that's where some money can be made once you're a bit more confident. Another trend line I draw from here, straight up here, 2 points. All right, I was trading this range the entire day today, so I'll just literally go with what I was looking at. I was looking at like a bit of an ascending triangle, maybe. It looks like a bit of a reversal happening here on the bottom. You can see pattern after pattern play out here, which is your free drives, right? All these patterns start to play out until we flip to support here, which is a nice little tight wedge here. And then price broke up, and then we've got the bull flag, which is pole, and then the break point to here. That measured move should be pretty much the same. I'll just get rid of that extension real quick. So we'll just take this point here and put it over here. Look, see, so we've got the confluence now of this horizontal resistance along here, and we also now have the measured move from this flagpole here of the bull flag, which we'll cover later. But that's how I use trend lines, right? So you've got the incline happening. It's been front run. I was expecting price to come down here originally, just to stick to within the ascending triangle that was playing out. I got front run, and that means we're pretty bullish, and that's exactly what I played out here after this little, these two trend lines that you could have drawn as price develops, which if anyone was in my Discord today, you would have seen me follow this play out this afternoon. Just two simple trend lines. Once you've got two touches, draw that line in. No matter which way you do it, just two touches, draw the line in, and you can see from that point on, price like dances with it. That's pretty much all there is to them. You see how this is a wick, this is a candle body here. They don't need to be precise. It's more about understanding the price action and having OCD candles. If you're too stressed about the accuracy of your candles, it means you're probably trading based off candles, and you're going to have a bad time. Sorry, not candles, sorry, trend lines. They're just a tool to assist in your trading. When I do my price action trading, I'm looking at the candles more so than the trend. The trend helps identify these patterns, right? Which is your broadening descending into a broadening ascending, right? Basic trend lines help you identify these. Oh, all right. Let's throw it back to you, Carl.
Sweet. And we just had a little SFP then as well, which I'll cover.
Yeah, beautiful.
As it's sort of playing out. If you want to flick the screen across. Nice.
Yep.
All right. So just looking at this now, you can see I've already got that trend line that Troy was drawing in, the horizontal, right? So a good little trick is if you want to hold these and drag it around, if you just press shift while you move, it will automatically flatten it out perfectly. Right, just like that. So yeah, as you see here, we've actually got another swing failure pattern here on the 5 minute. I mean, SFP's on the 5 minute, sort of a little bit like whatever. But as you see here, we had one, obviously, this is our first one blow off top for this range. I have to look left. I think there's a level in here. It sort of puts the level in. Right, then we have a bit of an SFP here as well. And then we're having another one here as well. And basically what that is when you have the wicks popping out through key levels and then closing below. So you can see how it closed at almost exactly the same level each time. And then it dumps off quite aggressively. So this could easily come back down. This was quite a little bit of a strong rally as well. So 1% over maybe an hour or something. So, it could be due to come back and test to see how keen the buyers are actually. And the first thing that we want to be looking for is for this first level of support to hold and for price to bounce off that. And then if it does, we'll see it break out through here shortly afterwards. If it fails this level, the next level to test is obviously this 8252. Obviously, if that fails, it's going to come back down to test these levels and possibly break down from there, right? So, which is what we don't want to see happen to the price action. So what we want to see is do something like this, flag up, flip of support and resistance. If something like this does happen, you do get, so this would be the breakout of the range for this bull flag, right? If we did get a breakout, it's probably just going to move straight up like that. So you might not get an opportunity, but if it does, sometimes they come back for an instant retouch of the level that the breakout is from, and that can provide a good chance for a really strong, solid entry setup, because you can long that entry there, and your stop loss can be below the next level support, which is here, which is pretty close. And obviously, once we go through risk management and how to set up trades and position sizing, a trade with a stop that's that close is going to give you a massive position. So if it does run, you're going to make a lot of money off that trade, that is for sure. It's definitely always the trades. As you can see, we came down, we sort of bounced off that level nicely. It's always the trades, obviously you get in as close to support or as close to resistance as possible. So typically in our trading setups, we want to be getting in as close to the market telling us that the trade is off, right? So you want to get in as close to the point where the market's telling you that the trade isn't going to work out anymore, and that will give you a much bigger setup based on the way we calculate our position size, right? So that's something that's might be a little bit confusing for the younger traders in here, but it's actually quite important to understand because if you can have a larger position size on your trade and you're risking the same amount, that's going to end up giving you much better risk reward over time. And obviously in combination with your strike rate, those are definitely going to be the trades that pay off large, the big side, all right? So just something to take notice of. We're going to go into that a little bit deeper. So we're going to go through a little bit on horizontal support and resistance. We're not going to touch on order blocks. It's going to be more later on in the course. But we're going to go through just key horizontal support and resistance levels. And, this is one thing I always like to have a little bit of a laugh about, because this is typical of the trader's journey, right? You learn horizontal support and resistance like we just had a quick look at then, right? So we have these horizontal levels and it comes through and tags it and sort of breaks down, right? And so this is the top of the range. This is obviously the middle level of the range. And then you could easily say that this is the bottom of the range, right? So yeah, okay, great, horizontal levels. And a lot of people snub their nose up at horizontal levels like, oh, I've got these really advanced indicators, and this is typically the first thing people learn, right? And then we go on, we become a little bit more advanced. We learn about trend lines, the horizontals that go on an angle. They do other things. They create these shapes and patterns and stuff like that. And then you learn about Fibonacci. You start to grow and develop and discover more. And you learn about the Ichimoku cloud and Elliott waves. And then by the end of it, you finally scrap all the rest of that crap and you come back to pure horizontal support and resistance. And you realize that's where the actual magic is in the market, being able to trade those horizontal support and resistance levels. But it's all about how you trade those levels that is the key differentiating factor. Because when you first get into the market and you're looking at the horizontal support and resistance levels, you don't understand the rest of the price action elements that go around into an actual trade setup. It can be very, very high strike rate, right? So typically support and resistance flips are going to be the highest strike rate trades that you get, and there's ways to trade support and resistance failures as well. So we have a quick look at them now. Right, this is typically my favorite setup. So pin bars, support and resistance flips are definitely my most profitable setups, and I just find the strike rate on these is unbelievable. So here's a really good one, which actually happened in the market not too long ago. If you want to, you can go onto our YouTube channel, which is DAX Trader, obviously at YouTube, and you can get in there. And there's actually a few videos that you can watch, and we're going through a lot of these steps and the trades that we're taking from the long down here to break through here to the support and resistance flip, etc., and how they play out. This is a really good example here. So we've got a really key level through here, and being able to pick the key levels is probably the most important factor in being able to trade support and resistance flips and be able to trade like this, because if you can't pick the good levels, you're never going to do well. But here's an example, right? So this level sort of starts over here and then sort of gets cemented here and definitely at this point here, right? One thing to take note of is when we have these thrust candles, right? So a thrust candle is a candle that opens below the level and closes above. And typically they're pretty strong and they're very obvious, right? So this is our thrust candle here, breaks through and pushes out to the top, right? And so now this obviously pretty strong. This is, a little bit of a triangle shaped pattern here, right? An ascending triangle, right? We push through at the top of this. This should flip into support, right? But it doesn't. So this is very similar to the 5-minute setup that we were actually looking at before, just with Troy, and I'll pull that up and show it to you guys in a second to show you that the patterns repeat very regularly, and this is a great one to learn, right? This is actually a support and resistance failure at this point here because we've broken through. This should now hold the support and we break off. What actually happens if we have another thrust candle and it dumps straight through our key level, right? And we open above and close below, right? So then that's telling us the next time we come back up and we have a rounded retest of this level, right? The next time we come back and test this level, it's going to be an easy sell signal. We also have a little bit of a shooting star. We have a pin top, right? Which also gives us another indication we should be shorting this level. So it's a little bit of an SFP, but not really because it doesn't take out the highs, right? But it is definitely a pin reversal candle and sort of forms a shooting star reversal, but it takes a while to actually put in the rest of the candles. And these happen a fair bit. Sometimes they just nuke straight away. I'll give you an example of one of those shortly, which happened actually after this candle, I think here. You can see it's starting to form a bit of a shooting star top. Might be a little bit hard to see because it's so small. Maybe that helps a little bit. I think it might actually have been after this candle here. You can't see the time. But we'll pull it up and I'll show you guys the example on the actual chart. But yeah, obviously then it comes back up and retests this level and gets nuked. We have this big sort of, pump through here and it closes below, which is a very bearish sign. Comes back up and retests that level and then dumps off again. Right, so let's go and have a look at on the chart. All right, so we are actually just going to open a fresh chart. If it will hurry up and load. All right, light cone going. All right, this is what we want. With BTC, we'll get down to hourly. There's a fresh chart. That's what we're going to be looking at. All right, so we're going to get back up into that zone. Just going to take off the indicators that are sticking out above. Okay, so this is our key level through here. We'll stick to the 4 hours quickly. It's a bit more prominent to see on the 4 hour, but this is our level through here, right? Just dragging it down a little bit. It's a little bit more accurate. So really nice rejection, obviously. So we have the support resistance flip failure here, right? And then obviously we get the rejection. So when you have a support and resistance level that's clear level of support here and then it fails like that, generally it's a very easy short and high probability that the next time you come back up to that level for a bearish retest, it's going to reject. And obviously it did there twice. Then we have this rally, we break through the level, and then now it turns into support on this time, right? So we come down, then when you get the close of the candle, so see how it was trying to dump straight through it, but the bulls push it up, we actually close on top of the candle, and then this was a pretty easy long, so long from there, as soon as it's closed on the level like that, and it rallied really hard, took profit up here into these levels here, and then it came back down, then we got a nice sort of pin bullish candle here, which is another one to long, and then we got another rally off that, and then we got our proper swing failure pattern at this point here. So to pick our swing failure patterns, this is literally maybe 1 or 2 ticks on top of that level, but just breaks through it ever so slightly. And what happens in these is a lot of buyers actually jump into the market because it looks like we're set up to, this actually made a lower low here, right? But it looks like we're set up to break to new high, right? And the market's looking quite bullish. Because remember, we can only see replay tool, we can only see to this point here, right? It looks very bullish, and when it start coming out the top, a lot of people, if you're shorting from here, and probably all through here as well, those people would have been putting their stop loss either above this level here or above this level here. And a lot of people put them literally right on the candle. So you have 1 tick above. All the people, especially low time frame traders, they start to pile into this market and they get trapped above. So when you see something like this, a setup like this, you've got a lot of trapped traders. And that's a recipe for a dump. And as you can see in the next candle, it becomes quite aggressive and dumps off almost instantly. And yeah, I ran through this on in YouTube, my YouTube channel, so you can get in there and have a look at those setups if you want to in a little bit more depth. We will go further into these a little bit later in the webinar series, but just to give you guys a little bit of examples how important horizontals are and how you can use them to trade for trade setups and obviously support and resistance, and also support and resistance failures. Right, and there's a whole heap of different types. We'll go through when we have when we go a lot deeper into swing failure patterns, because there's multiple different trade setups you can take, all from understanding how price action works around single and key horizontal levels, right? So definitely something that, especially if you want to trade Forex and commodities like gold and silver, platinum and stuff like that, really important to learn and understand that style of trading. The next one is obviously bearish retest, right? Which I sort of touched on before. Like altcoins are consistently in a bear market. Typically, they're in a bear market for anywhere from 6 months minimum up to 2 years to 3 years, even some, and some that's never recover as well, right? So we need to be aware of that. But typically, your majors will have recoveries. When they do, they go on really strong, super aggressive pumps, sometimes for 700, 800, 2,000%, and they have that massive growth period, and it only goes for 2, 3, and sometimes only 4 weeks at a time, right? And then the rest of the time it's just retracing that 700% pump. And it gives us so many opportunities to make a lot more money on the way down than it does on the way up, because typically with altcoins, if you don't get into the bottom and you miss that run, you maybe have 1 or 2 opportunities to long in a bull flag or catch a retrace, and then it usually only has about 3 rallies and then you're done. And unless you're going to just chase the market, which is a bad trading strategy, a really good way to get wrecked. I don't think that is the way you want to be trading and FOMOing in, right? So I believe the best way to make money from altcoins is actually shorting them. And this is a really good example of Tron just coming up for just basic bearish retests, right? So I'll drag this up and make it a little bit bigger. Right, so here we go. This level obviously doesn't come up and test it. Tries to get back above it, but not really. It gets held down by this block here, right? So we come up, obviously sell off again. This level is obviously put in as what I call the shoulder in the market. It comes back up, it tags at previous support level, and then sells off as soon as it has the first tag, right? So there's people waiting, the bears are waiting at this first level of resistance to put their shorts in. You can see as soon as it came up and tagged this level, it got nuked straight away. Can't get back up again, breaks through the level, right? Now this becomes a previous support, now turns into resistance. And we come back up, retest that level, sort of have a bit of a swing failure through that level, and then close below, right? Another very bearish sign. The market's about to have another sell-off again, and then dumps off again, right? Then one more time, we have a nice rally here, pushes up through the market, and comes back up, swings through. We have a wick above through the level, and then close below, and then instantly dumps off again, and then goes sideways. So these are all really profitable trades all through this period here, and pretty much all the altcoins, especially the majors, ADA, Litecoin, EOS, they all did this for a couple of months. It was very easy to pick these trades out of the market. So something to be aware of and be able to trade these bearish retests. Here's examples on Bitcoin. So we have our swing failure pattern here. Obviously, this is a really tasty setup, and we're going to go further and study that deeper when we go into swing failure patterns. It's a little bit more advanced for the first session. And then obviously it puts in this head and shoulders, that breaks down, comes back up, tags the first level of resistance, sells off. Now that obviously this bear flag pattern here creates a level of support, also creates a level of resistance. We come in, have our shooting star top through here. You can see the wick to the upside, doji top here, and then the next candle obviously opens bearish, and we have a quite aggressive sell-off. This ends up dumping off pretty aggressively, right? But also has put in another level of support, which is now flipped into resistance. We come up, tag that one more time, then have a really aggressive sell-off, right? And then that takes out the bottoms here. If anybody was trying to long from here, they get taken out multiple times. Then we take off and sell off again from a very similar level. So if you drag that across, you don't get a close above that level. So you get a few wicks above, right? But we don't get a tag. We don't get a close. I think this is 4 hour. This is a 1 hour, even better. We don't get a 1 hour close above the level, and then it sells off quite aggressively. And then it sort of does the same thing again. Comes up, tags that level again, sells off. Comes back up, tags that level again, sells off. Then we come up here, we have a swing failure pattern that sells off again. So just in this period here of a couple of days, maybe a week or two, we have 1, 2, 3, 4, 5 really solid, and probably even 6, 7, and 8 trade setups just in this area here. Just off knowing and understanding how to play these horizontal levels. So yeah, typically they play out very, very high strike rate as well. So it's really good to learn and understand how these play. All right, so support and resistance flips. When the market is falling, look for areas that we're structurally support, right? And we want to be then shorting from those because that's going to be support, flips into resistance. And then when the market is rallying, look for areas that we're structurally resistance, because those areas of resistance are now going to be flipping into support, and that's where we want to be waiting with our buys. We're going to go a bit deeper into this a little bit later, but we also, a couple of other things to be aware of. So for example, here, this is on gold, right? This is a nice little level in here. So we have a 1 touch, 2 touches here. It comes back up, breaks through this level, and bounces off this area here. So typically, you want to have at least 3 touches on a level for it to be really secure as a strong support and resistance flip. If you have 3 clean touches, so if you have 1, 2, we have 1 more over here, and then the breakthrough and support resistance flip, in my rules, you can trade that blind, right? So you can just put the order in at the level and just let it play. Maybe use an ATR stop or a stop that is a little bit lower than a key support level, and we'll come in, catch your trade, and then take off in the other direction. It'll be a nice profitable trade. So typically super high strike rate with 3 touches, right? If you don't have 3 touches, you want to be looking for extra confluence. We've got 2 touches here, but you can see this also gives us a really nice level here. When we come up and we get obviously the top of our Fibonacci level through here, the bottom of our Fibonacci level here, we come back up, and this is the 0.382 on our Fibonacci level, right at the exact level of our support and resistance flip. So we've got really nice confluence in that area there, which makes it a really good and solid trade. So trading is all about trying to put together a plan and a strategy, and it's about trying to find the little hints in the market, sort of like an FBI detective, and you're out there, or I should say CSI, right? You're a forensic analyst, and you're out there, you're trying to find all the different clues, and you put those clues together so that you can form an argument of which way the direction price is going to go to and how it's going to react off certain levels. So yeah, that's pretty much it for support and resistance and horizontal levels. Anything that you want to touch on that, Troy?
That's pretty much covered up pretty well. With horizontal support and resistance, just while we're on that, there's different confluence. As Kyle showed with the fibs here, this 38.2 is lined up with the horizontal support. But then you have things like pivots, order blocks, moving averages, and if they all come over at a single point, it's usually a heavy confluence. And it's just as you mentioned there, you are an investigator, and you're trying to put these pieces of a puzzle together to find a reason to go long or go short. And the more points you have, or the more arguments you have towards that, the greater your chances will be. So if you know how to identify those and wait for price to come to those, then you can take a nice clean trade from that point.
Very, very good. Thank you. All right, so moving forward, guys, homework for session 1, week 1. All right, so we want you to find 2 support and resistance flips on Bitcoin. Put in the levels and then post them up in the Discord group. We want you to see you guys find 2 broadening descending wedges and 2 broadening ascending wedges, and post them up in the group. And then also find 10 pin bars or bullish hammers and see how they trade it out. And for each one, we want you guys to start putting in your entry, your stop loss, and your targets. If you don't know how to do this, it's fine. We're going to cover those off in the next couple of webinars. But just do what you can, or just leave it if you don't know how to put them in, and just type that somewhere on your chart or underneath when you post it. So yeah, and post those charts up in the Discord, and we'll give you guys some feedback if you're doing it correctly or incorrectly. And yeah, we can move forward from there. So hopefully you guys got a lot of value out of tonight's session. So we can all move forward to session 2. So week 1, session 2, we're going to go through basic patterns and formations. We're going to go through supply and demand zones, which are iTrade's institutional order blocks. We're also going to go a little bit deeper into support resistance flips and trading general pattern failure as well. So yeah, there's going to be very interesting couple of topics some few quite basic topics in there, obviously, over basic patterns and things like that. And then obviously we're going to go through some more advanced topics like general pattern failure and how to trade those, and look for the vulnerability points in the patterns. We're obviously going to learn the patterns first and then learn how to counter trade them. And then we're also going to look at institutional order blocks and trading those and how important they are in general market structure. All right, so that's pretty much it for the first webinar, guys. Hopefully you got massive value out of this. If we did seem like we were going too fast, you will catch up, and this whole course is designed so you can go through and rewatch it multiple times, and every time you watch, you're going to get more and more out of it depending on the level that you are at in your trading. So that's pretty much it. We're going to go quickly give a couple minutes to questions if anybody has any questions for me or Troy. If I can find the chat box. So here we go. All right, chat box. Come back to me. Here we go. All right, was wondering where the same Discord PM on here. I've downloaded Discord app. Yep. So PM on Discord or just in comment. Yeah. So in the group, we want to see you guys post in the group so everybody else can see. So obviously, yeah, Troy just posted the Discord, but obviously we want to get everybody that's doing the course into the online bootcamp chat. So don't be posting them up in the main chat. Probably annoy shit out of everyone. Start posting them up in the bootcamp, the 6-week mastery bootcamp Discord chat group, and we can get in there and we can have a look at that. Our site that we use for charts is TradingView. So yeah, make sure you get on there and set up a TradingView account. They'll make your life a lot easier. If you guys do need help with super basic stuff like setting up your TradingView accounts and things like that, I can do a couple of one-on-one sessions with you. Obviously, I'm not going to give up my time for free, so hit me up about that, and we can discuss in private if you need one-on-one tutoring. So yeah. All right. Any other questions? Okay, all good. Thanks everybody for logging in and spending an hour and a half with us. We'll see you guys all on Thursday night.
Awesome. Thanks, Kyle. Thanks, guys.
See you guys soon.